Hey everybody, this is Jim at SP500chart.com. It is after the close on December 17th, 2012. We're going to take a look at the chart. But before we do, I have to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial pro, just a guy who draws lines on charts. So let's take a look. Well, coming into today, we had mentioned on the weekend weekly review that it looked like the S&P was forming a new channel that was wider and broader than this little green channel right here. And it is defined by these two, call them turquoise lines, I guess. And even though there was a little move underneath that line late on Friday, it was not technically significant. And I just happened by chance to mention that if the market gaps up this morning, look for a move to probably come on up and test this line again, this neckline. This is a double purpose neckline, by the way. I'll show you what I mean in just a second. But I now would expect the S&P to make a run at 1438, 1439. And I would expect there to be some resistance there, because that is really the neckline from our triple top, which itself was part of a head and shoulders pattern. Now that pattern just eked out maybe meeting its minimum target when we got down to underneath 1345 very briefly in the middle of November. But what it looks like we're dealing with now is the potential of a quite bullish setup. And I'll say potential because nothing really counts until a pattern is confirmed. But we had an inverted head and shoulders pattern that took place over about a 2.5-week period in the middle of November, which itself looks like it may be the head of a larger inverted head and shoulders pattern that we may now be forming. And if that is the case, and we run into resistance if we get over this line, which is the neckline for this larger head and shoulders pattern, and we run into resistance up here in the mid 1400s, as I would expect, then look what we're dealing with, guys. We're dealing with now an even larger potential inverted head and shoulders pattern. Here's the left shoulder, a double left shoulder. Here's the head, and then we're not, it's only maybe 2/3 the way there. But I still think this is worth mentioning because we're seeing what looks to be almost like a nest of patterns. Now you might say, well, what about that big old head and shoulders right here? It didn't seem to do much. Well, yeah, you're kind of right, but it did just barely meet its target. And I just, you have to call what the chart presents. And even though we're facing the quote fiscal cliff and all these kinds of things, you can see that I've in the daily chart here just had a little fun pretending as if this is going to be the neckline, and pretending that we do break out at some point, probably in late January or early February of 2013. What's really interesting about this is if that takes place and this is our neckline, and there's no guarantee of either right now, this pattern seems to want, if it completes, would have a projected target just under 1580. Now, 1580 is kind of an interesting number because if we back out on a monthly chart, 1580 is right where this red line is, right here. So I just find that to be very interesting. So that could be something of, I guess I would say, to test this level in the mid 1500s, mid to high 1500s, that the S&P has already run up to essentially twice. The first time it didn't make the mid 1500s, but it got above 1500. The next time I think we hit 1560 something, going by memory here. What was it? No, 1570 something. Back here it was 1550, 1570, and this time we'd be looking at maybe 1580, 1590, if that pattern plays out as it looks like it may. So I just, for right now, though, we can take a look at the chart if it'll come back. There we go. You can see this nice move, and we kind of paused halfway, slid down a little bit, came back, slid back a bit, and now the S&P ended at the day's highs. So I would expect some likely continuation of this move. Now keep in mind, we are dealing with a couple of things here. We're dealing with what we should expect to see resistance once again around 1438, 1439. Additionally, even though I don't think this little green trend line is as important as I thought it was, it still held the markets up nicely for a number of days before breaking down. I would expect this to also create some resistance. So as the S&P comes back, and I suspect it will, to the mid to high 1430s, let's see if it's got the strength to get over this level right here. Because if it does, then that will signify a breakout over our neckline right here. But that would give us an asymmetrical pattern, which I would really rather see. And I've said this before, and I've been disappointed by not getting it. But in a perfect world, we would stay between the low 1400s and 1440 for another week and a half or so. Then take that line out. And that would build a little bit bigger base and would maybe give it a little bit more room to run. Which, by the way, I need to remind you that if this inverted head and shoulders pattern, the quote medium-sized one, if this is a legitimate pattern and it breaks out, then out of necessity, if it meets its target, we will get over this red line. And remember, that red line is kind of the larger potential inverted head and shoulders. So this is all very interesting, what we will probably see taking place around the first of the year. Kind of excited to see how this works out. And guys, I hope you'll stick around with me and tell your friends about what I do here, because I think the markets are going to start to get very interesting if and when we start to approach those levels in the S&P that represent historic highs. So this is probably going to be very interesting. And again, I just want to thank you for watching this. Thanks so much. Take care.